Hello and welcome to this video. Today we're going to be doing a stock analysis on Costco. Now if you don't know what Costco is, it is a big box store in the US where you can get a lot of stuff for cheap, but you have to have a membership card. Now the reason I explain this is because a large part of Costco's money is because you have to have a subscription. So imagine it's like a Netflix account. You need a subscription to get in. That is the same with Costco. So you simply need this Costco cards to get in, and those cost X amounts of money each month. There are some different tiers, of course. Now, let's take a look at the graphs. As you can see, recently we have quite a setback here. We had a death cross here at $1,039, and we're trading right now at 930. So not that great at the moment. This is also because they recently had a earnings which was below expected. Now, if we take a look at the graph overall in the past year or so, let me just set my candles for now real quick. You can see it has been performing very nicely, and this is because in high inflation times stores like this are quite nice because they can set up their margins and the customer still has to pay. Imagine eggs, olive oil, beers, stuff like this, which has increased insane in cost. Costco is simply just going to set up the price so they retain their margins or make them even bigger, because then once the market comes down again, they aren't going to set the prices back down. So they are quite nice to have in high inflation environments, and with the tariffs that the United States are putting on Canada, Mexico, and even Europe and Asia, we might see inflation rise again, where Costco is having a lovely time earning money. Now, if we take a look at the RSI, as you can see, it has been performing quite alright. It is a bit up and down. The pattern with Costco, because it is such a expensive stock, the volume is quite small compared to others, which have a $400 billion market cap. But as you can see, they cost $930 each, and it's the fewest personal investors who can offer to buy more than one or two or three stocks of these per time. So as you can see, it's gonna be a bit more blocky, I would say, as it go up and down instead of just permanent, but there are quite larger gaps on the up and down. Now, in the past year, it has been a bit more in the upper channel, which is of course nice, but then recently, as you can see, we have been trading primarily here in the bottom channel of the RSI index and all the way down here in what is that, peaking out at about 15, 16. So quite bad. Now, something I want to highlight with Costco is, despite their earnings being bad, I think it's quite a nice stock to have. Personally, I don't own any of Costco, but recently I just learned something quite interesting. As you can see here, the dividend, it's quite poor, but I'm going to show you why it actually isn't. If we go back here and look, you can see this is in dollar amount, and recently they just paid out $15. $15 is insane, and this is a special dividend. As you can see, it also did that all the way back here in 2020. That's because Costco rakes in such large amounts of money that sometimes they have enough money on their books to buy the entire company, and they don't want to do that, so they pay out special dividends for the investors. So if you have 10 Costco stocks, you'll get $150, which is insane. So that one would be about 10% when it was paid out, as you can see here. Let's see when it was paid out, the dividend. Give me a second here. It was paid out on 27th of 23, which would be, of course, they do fall once they pay out dividends, of course, but it was at 960, so that would be above 15% of the stock, which is quite crazy. Now, if you take a look at the seasonals, as you can see here, it performed quite nicely in 23 and 24, but you might know those were high inflation years. But let's take a look at overall how it does in more years. As you can see, we only have 1 year at the moment where they tanked all the way back to 2013, and that is because it is a simple business model, but it's quite smart, and they make a lot of money, and they are quite popular within their customers. So it's a very stable stock to have in the bottom of your portfolio, simply to rise, pay out dividends. Sometimes they pay out good dividends, and they do this about every third or fourth year. So maybe have an eye out for that if you expect high ones every year. That isn't going to happen. We can even take it further back, and you can see again we have only two companies now that were negative. So it's a very nice stock to have in your portfolio, just as a solid bottom to make sure you never lose too much money when the market has big downturns. Of course, they did fall like the rest of the market recently, but of course. Now, the technicals are quite bad in this, to be honest. They are 1 month is buy, but a week is sell because of the fall. I would not personally buy into this just yet. We did, however, have a support line here. As you can see, we have hit a support line here, so it might trade sideways here and then maybe a bit up. If it continues down, I think it's got, we don't really have any proper support lines. We have a small one here, but it's quite unstable. It's a bit too small. I do think we need it's all the way down here in 500 to have a proper support line where we have some sideways trading. So I would be a bit weary if it trades below this. I don't think it's gonna take 50% off the stock, but I think it's gonna trade around here, maybe down to here. It could also actually, now that I look at it, it could also just trade here. I think in this interval between 908, 920 and 855 is gonna be the main trading ground. If it's gonna fall through here, maybe it's gonna rebound. Let's see, what was it yesterday? Aftermarket. Aftermarket, it is up, of course. So yesterday's loss is almost negated. So yeah, quite interesting. Now the financials of Costco is their margins are quite shit. As you can see, they make $166 billion in 2020, but they only get $4 billion on the books. And as you can see, every single year it's about 2. Last quarter it was up a bit, but the reason I like this stock still, as I said, it was a subscription-based model, which means if you buy a lot of stuff or not a lot of stuff, you will still get a lot of money. Their main revenue is from these subscriptions because they're quite expensive, and their goods is quite cheap, which means they just need to get people in the door to get. Of course, they earn money on every product sold, almost. But their main subscription model is the revenue from subscribers who have these cards, which is an insanely smart model. Now, of course, technicals is a sell. Analyst rating is a buy at the moment. I get that, but it is quite unusual to see this many hold when the stock has tanked so much. And strong buy, I would not recommend a strong buy at all at the moment. I would rather a hold or a soft buy or even a soft sell. If you do have quite a lot of profit in this, I would not be unrealistic to take some profit off the top just to make sure that you take some of your gains, of course. But at the moment, when we have this large gap between the SMA lines, I wouldn't get in. Also, we've just had the death cross. I'd wait to see it trading a bit more sideways or even tanking a bit more before you pick up. As you can see also here in the RSI, it is performing quite badly. So yeah, also you can see the volatility curve here is going up quite a bit, even though we're not seeing that big of a gain. So yeah, not that big a fan. On short term, it's quite poor in my opinion. Long term, it's insanely good. So if you don't really give a shit if you take $100 loss within the next couple of months, I would totally buy this. But if you want to make sure you get most bang per buck, I would wait maybe a month, see how it trades, then get in. Yeah, thanks for watching this video. If you like this video, don't forget to like and subscribe.